Ladies and gentlemen, good day and welcome to Minda Corporation Limited Q3 FY26 earnings conference call hosted by Elara Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Munindra Upadhyay from Elara Securities India Private Limited. Thank you, and over to you, sir.
Thank you, Rudra. Good evening, everyone. On behalf of Elara Securities, I would like to welcome you all to Q3 FY26 earnings conference call of Minda Corporation Limited. Today we have with us from the management team Mr. Akash Minda, Executive Director, Mr. Ajay Agarwal, President, Finance and Strategy, and Mr. Nitesh Jain, Lead Investor Relations. I would like to thank the management for giving us this opportunity. I'll now hand over the call to the management for their opening remarks, post which we will open the floor for Q&A. Over to you, sir.
Good afternoon, everybody, and thank you, Elara Capital and Mr. Upadhyay, for organizing this call. Good afternoon, everyone. Welcome to the Quarter 3 and 9 months Financial Year 26 earnings conference call of Minda Corporation Limited. I hope you all are doing well. It is our pleasure to connect with you today and present our performance for the quarter, along with some key developments across the businesses. India has recently secured significant trade deals with the UK, European Union, and the United States, marking a transformative step in the Indian market. These agreements promises to unlock greater market access and business opportunities, positioning India as a key player in the global trade arena, especially for the automotive and auto component industry. The Union Budget 2026, revealed on Sunday, has set a clear course for India's automotive future, shifting the focus from short-term buyer subsidies to long-term supply chain resilience and green energy integration with initiatives like Semiconductor 2.0, ECMS scheme, rare earth corridor establishment, and focus for MSMEs also. For Quarter 3 FY26, we witnessed strong performance across all major vehicle segments due to the key reasons such as GST reductions, festive season buying, new launches, improved financial availability, supported by favorable market conditions. Overall, the auto industry grew by 17% and entered the Quarter 4 FY26 on a firm footing with stable macroeconomic conditions and policy-led affordability gain. Coming to the performance from Minda Corporation, for the Quarter 3 FY26, the company has maintained its strong growth momentum led by outperforming the automotive industry growth and achieved its highest ever quarterly revenue of rupees 1,560 crores, representing a robust growth of 25% on year-on-year basis. The performance was fueled by sustained demand across key vehicle segments, increased share of businesses and content per vehicle, and strong traction in EV and premium product categories. During the quarter, the company's EBITDA stood at rupees 184 crores, reflecting a margin of 11.8%. The reported profit after tax reached rupees 84 crores with a PAT margin of 5.4%, supported by improved operational efficiencies and a favorable product mix. I am also happy to share that our board of directors has recommended an interim dividend of 30%, that is rupees 60 paisa per equity share. Our associate company, Flash Electronics, continued to deliver strong performance with revenue of over rupees 488 crores with an EBITDA of 90 crores, representing a margin of 18.4%. This strategic partnership has significantly strengthened our presence in high-growth domains such as EV power electronics, traction motors, motor controllers, and other related products. The collaboration continues to deliver operational synergies and will play a pivotal role in achieving our growth roadmap. Our performance continues to be guided by the key pillars of growth, which we have shared earlier. First, investment and growth in existing businesses. Second, export market focus. Third, premiumization of existing products. Fourth, new product launches by way of partnerships and organic technology development through our technical centers. We are happy to share that the board of directors of the company has appointed Mr. Ajay Agarwal as Group Chief Financial Officer and a key managerial personnel of the company, in addition to his existing role of President, Finance and Strategy for the company effective 5th February 2026. We are also happy to let you know that the board of directors have approved an ESOP scheme 2025, marking an important milestone in rewarding our employees. Our ESOP scheme 2025 is forward-looking and aligns with our Vision 2030. This is, of course, subject to shareholders' approval. Looking ahead, we remain committed to executing our strategic priorities with continued focus on enhancing our system solutions offering, strengthening customer relationships, and investing in new technologies and systems. Our emphasis on operational excellence, strategic partnerships, and innovation will play a critical role in driving the growth in FY26 and beyond. Our key focus remains on disciplined capital allocation, expanding our presence in high-growth segments, and advancing our R&D capabilities that will drive long-term value creation for all our stakeholders and shareholders. With that, I would like to invite Mr. Ajay Agarwal, Group CFO, to take you through our detailed financial presentation and performance and key highlights for the quarter. Over to you. Thank you.
Thank you very much, and good afternoon to all of you. I hope you have the slides in front of you. This was shared a while back. I'm on slide number 2. Slide number 2 pretty much gives you the overview of Minda Corporation and its scale of operation. As many of you know, the group's revenue in FY25 stood at 7,472 crore, with a consolidated statutory revenue at 5,056 crore. We have manufacturing footprint, which includes 32 plants and 18,000 employees all across the globe. Our strong performance is backed by strong focus on innovation, with which we have close to about 320 patents filed, out of which 147 patents have already been granted. Moving to slide number 3, this slide talks about the auto industry in India. As many of you would have already seen, the auto industry in Q3 grew at around 16.8% vis-a-vis last year, and all across strong performance were witnessed, whether it is tractors, whether it is commercial vehicle, three-wheeler, passenger vehicle, and two-wheeler. Of course, tractors and commercial vehicle and three-wheelers led the chart. On a quarter-on-quarter basis, we saw a marginal dip. Of course, that is pretty much to do with the post-festive season normalization. We saw a very strong Q2. That could be one of the reasons, but despite that, the growth is quite stupendous. Speaking about the Q3 key strategic developments in Minda, one, of course, we recorded the highest revenue of 1,560 crore, representing a growth of 25% year-on-year. Our EBITDA margin stood at 11.8% in Q3 26, registering a growth of 30 bps year-on-year. We have also registered a lifetime order book of 2,000 crore with multiple orders across product category within the organization. We also secured multiple platform-specific instrument cluster order across leading OEMs for our instrument cluster or display business. During the quarter, we also filed 4 new patents patents filed thus far to 320 plus. On 9 months performance, our revenue grew at 20% year on year, obviously backed by strong fiscal policy and strategic initiatives adopted and announced by the government. The 9-month margin of EBITDA stood at 11.6%, representing a growth of 26 bps. Our lifetime order book for 9-month period recorded at 7,000 crores, and as we have already announced, our partnership with Toyota, it is also shaping good shape for our switch business across vehicle segments. And in the 9-month period, we had also filed 16 new patents, taking the total patents filed to 320 change. From a revenue, I'm on slide number 5. From a revenue perspective, on year-on-year, our revenue grew by 25% at 1,560 crore. For a similar period, our EBITDA grew by 28% to 184 crore, and PAT for a similar period grew by 36% to 88 crores. Speaking of 9-month period result, our revenue grew by 20%, taking the top line to 4,482 crores, and EBITDA of the similar period stood at 518 crore, registering a growth of 23%, and PAT for a similar period grew to 238 crore, representing a growth of 17%. As we all know, in the month of December, the government announced a new labor law. Due to the change in the labor regulation, we had to account for 4 crore of exceptional items due to the change in the regulation. That has also been accounted for in these numbers. From the business vertical performance perspective, our mechatronics and aftermarket and other businesses grew by 17% from 608 crores to 710 crores, and information and connected system business from overall perspective during the quarter grew from 645 crore to 850 crore, representing a growth of 32%. For a similar period on a 9-month period, the revenue stood at 2,073 crore for mechatronics and aftermarket, whereas information and connected business stood at 2,409 crore vis-a-vis 1,914 crore, representing a growth of 26%. Moving to slide number 7. This slide gives you a bit of a snippet in terms of our revenue breakup, wherefrom we have got the revenue of 1,500 crore revenue. Wiring harness contributed about 28%, vehicle access contributed 23%, cluster business contributed 18%, and die casting business contributed 15%. From a geography perspective, as the company continues to be a heavily India-dependent company, India contributes about 88% and export contributes about 12%. And out of that, 5% comes from Southeast Asia business, and Europe and North America contributes 7%. From a end market standpoint, 45% revenue comes from two-wheeler and three-wheeler. Commercial vehicle contributes 29%, passenger vehicles contributes 15%, and aftermarket contributes about 11%. I'll not speak much about our associate company Flash's performance because Akash has already in detail covered. They have also, witnessed a strong and strategic, they are in a strong and strategic growth path across their product line, and they have also admitted few large OEMs during the quarter. From a capital capex perspective, during the year we had committed to spend close to about 400 odd crore for the capex. We have already spent about 276 crores for the 9 months ended FY2026, and we plan to spend another 100 crore in the coming quarter as well. We are moving strongly in operationalizing most of our capex, whether it is die casting plant in Pune, whether it is MIL plant in Pune, as well as die casting plant in Greater Noida. Moving to slide number 15. These are some of the products which are under launch. We have already detailed out in our investors day presentation as well, whether it is sunroof, PLG, whether it is switches or EV products. And slide number 13 gives you our consolidated income statement from FY21 till FY25. And slide number yeah. So with this, back to the operator, we can start with the Q&A, please.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Our first question comes from the line of Raghunandan L. from Nuvama Research. Please go ahead.
Congratulations, sir, for extremely strong numbers. Sir, my first question was on commercial vehicle space. It's an important segment for us, representing around 30% of revenue. Can you indicate your thoughts about the outlook here? Do you think the demand conditions have significantly improved and you see an upcycle in this space going forward?
Yes. Hi, Raghu. How are you? I think the commercial vehicles has done growth in the recent quarter as well as the first 9 months. We expect the commercial vehicles also to continue growth in the next quarter 4 as well as in the first half of next year. The primary reasons we believe is due to the regulation changes that have been there, plus the infrastructure upgradation that is happening all across India. And last not the least, of course, that the trade that has been booming within India as well as for exports. So India is, of course, on a growth, with the GDP growing. So we believe that these are the reasons where the commercial vehicle segment is expected to grow at least for the immediate future.
Noted, sir. Thank you. Secondly, on the orders for switches and sunroof, a very large order of 1,000 crore for switches and a sunroof 350 crore. Both are starting SOP, or the manufacturing is starting for both in FY27. Firstly, when you say lifetime order, for how many years does it represent? And would there be a ramp-up phase for this order? That is, would it take 2-3 years to reach the peak? How does it work?
Yes, Raghu. I think what you answered is also your own questions. So yes, the switches business is expected to start in quarter 2, FY28. So next year, the plant is already under construction. Its partners are already here, and now the localization and the other things are going on. So we expect 1 year from here ends the production to start. And yes, the orders that you mentioned are lifetime, so they will take about 2 years to ramp up, and then subsequently it will move forward. Number 2, when it comes to the sunroof, so that is also a lifetime business. It is expected to start SOP in quarter 1 of FY28, which is next year, and 2027. And the ramp up is expected to happen over the next 2 quarters. So that is how we expect these businesses to ramp up.
Thanks for the detail. And would it be fair to assume that lifetime order would mean 4 years?
Yes, on a typically you can say 4 to 5 years. Yes.
Understood, sir. And on the export side, how are you seeing the signs of improvement? Recently, there has been both talks of EU and US agreements with India. So how do you see the future for FY27 and also your strong markets of Asia, if you can talk about all of them?
Yes. So for us, at least now we can see the exports coming back to normalcy in this quarter. You will acknowledge that over the last many quarters, about 4 to 5 quarters, the exports have been kind of subdued. But this quarter we have seen coming back to normalcy, where our exports to the Europe as well as to US both are picking up. And it is across the divisions that we have. Now we welcome the trade agreements between UK and Europe, as well as the tariff alignment that has happened between India and US. However, auto components is not clear yet, and we will get a clarity soon. But hopefully it should be in the similar range and not much of a difference. Where we continue to engage with our customers, the order books that we have already won in the last quarters where we have shared before, they expect to come without any delay into start of production over the next few quarters.
Thank you, sir. And lastly to Ajay, sir. Sir, if you can indicate other expenses have seen a 7% QOQ drop. Can you indicate the reason and whether this number is sustainable? Also, if you can talk about copper, there has been a big increase in copper price. Is there a lag for us in pass-through of that commodity impact to customers?
See, all indexed costs are having, a reciprocal arrangement from our vendors plus from our customers' perspective. There could be a lag of a quarter or so while we do the true-up with our vendor and pass those on to the OEM. That arrangement has been there with the organization for several years now, and the practice is, working quite well. Yes, definitely, this year has been quite a aberration when it comes to commodity, and not only for copper, it is equally applicable for aluminium and rest of the alloys as well, because we are heavily dependent on aluminium, copper, and rest of the indexed products too. Speaking about the other expenses, we have managed to reduce the other expenses, and largely those are to 2-3 counts. One is savings in energy costs due to renewable and few other things. Second, we have managed to carry out certain activities through job work as well. That has also led to reduction of our other expenses.
Thank you, sir. So fair to assume that you will be able to maintain the other expenses to revenue at this reduced level?
Yes.
Yeah. Thank you, sir. I'll come back in the queue.
Thank you.
Thank you. Our next question comes from the line of Jyoti Singh from Arihant Capital Markets Limited. Please go ahead.
Good evening, sir. Hope I'm audible.
Yes, ma'am, you are.
Yeah. So my first question is, while the shift to information and connected system is driving top line growth, but consolidated EBITDA margin have remained stagnant around 11.5. Can you bridge the path to your target of 12.5%? Specifically, how much of this margin expansion is dependent on the localization of high-tech electronics versus the pure operating leverage?
So, Ms. Jyoti, we have already shared before that, first of all, where we come from is about high single digit about a couple of years ago, and the last 8 to 12 quarters we have come from about 10% to a sustainable and consistent delivery of 11.5%, which is what we had committed as well as shared with all our shareholders and all your colleagues. Similarly, I think this is also one of the highest ever EBITDA that we have posted at with 25% growth in the revenue, and on the 9-month basis also we have posted the highest ever EBITDA in terms of the value and percentage terms. What is going to drive growth going forward? is on multiple aspects. Our first continue focus on operational excellence. Number two is we are investing and going to be focused on localization and backward integration as well. There are multiple initiatives that are happening that I can't share on the call, which are strategic in nature on how we can improve that, whether it is related to the electronics or some of the subsidies that the customers have, the government has offered us, and we will be investing in that, which will help us drive Minda Corporation's growth both from top line and bottom line. So this is what I would like to share about how we have come across and where we are looking at growing from the EBITDA perspective.
Okay, got it, sir. So, sir, you have announced around 2,000 crore capex plan to triple revenue by 2030. So, how will this massive investment translate into a 15% plus ROCE, and at what stage do we expect to see the peak of this capital intensity?
See, every year we spend, give or take 300 to 400 crore. So if you are looking at, up to FY 2030, by design we will land up spending around 1,500 crore. And given our other strategic priority, whether it is premiumization, whether investment in, new businesses, acquiring new clients, focusing on export, launching new products, all those will also accelerate our capex from 1,500 crore, design 1,500 crore to 2,000 odd crore. From a return on capital employed perspective, if you do an apple-to-apple comparison, we are already doing a margin of about 22%. Because, why the dysfunctional numbers you are able to arrive at is due to the fact that, interest is levied in Minda Corporation, whereas the revenue or the profit of Flash is not consolidated. But if you do the apple-to-apple comparison, we do close to about 22% ROC. And I think, what we have promised the market to deliver by 2030 is improvement from 22 to 25%. And given our disciplined capital allocation and making sure that whatever investment we do, particularly from connected business, high revenue business and high margin business, we are confident that we will be able to, increase our ROC from current 20% rate to 25%.
Okay. And sir, what is our current gross debt as of December 31st, both long-term and short-term? And have we repaid any during this period, and what are the repayment plan going forward?
So our gross debt is about 1,100 odd crore, and we have paid about 70 odd crore debt during the first 9 month period. I don't have the quarter-wise details, but during the 9 month period, we paid about 70 odd crore. And as you know, promoter has infused around 104 crore through share warrant. That amount was largely used towards the repayment of debt.
Okay, during FY26 or further?
During FY26.
Okay. Thank you so much, sir. That's it from my end. Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on the touchtone telephone. Our next question comes from the line of Sridhar Kalyani from Antique Stock Broking. Please go ahead.
Thank you for the opportunity, sir. My question is with regards to Flash Electronics, where Mr. Sanjeev had mentioned a few months back on Minda Corporation's Investor Day that they were in very advanced state with respect to the non-ferrite synchronous motor. Just wanted to understand what is the status on that product. Are we ready for mass production, or do we have any commercial order from any of the OEMs? Thank you.
Yeah, so that motor is already designed and developed by our technical center or Flash Technical Center in Poland. Yes, it is already, it takes a lot of time on the field trials as well. But yes, we have showcased this product to our couple of customers as well, and we are working with them closely. But yes, no order has been booked so far. But our large customers are, moving forward for final evaluation or further evaluation, and then we can hopefully be able to conclude something in the next, couple of months.
So, is it fair to understand that the OEMs are currently testing the product rigorously? Is that the current status?
That's right, yes. We are also testing, yeah. And then we have had some customers as well and on the field.
So generally, sir, how much timeline does it take for the OEMs to test and validate a product and then for that product to come under our SOP?
So technically in the automotive industry, whether it's a new product, you can say that once the product is ready to offer to the customer, then depending on the product, and in this case, you can say at least about 6 to 8 months time, because the entire architecture and the vehicle performance is based on the motor. So yes, with the technically proven solution and all the simulations and the validation that are done in the lab, it could take somewhere about 6 to 9 months from after award to come into the mass production, from the first sample to come into the order, and then so on and so forth.
Got it. And this is a proprietary product which is under the label of Flash Electronics. Is the understanding correct, sir?
Yes.
Okay. Thank you so much.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and one on the touchtone telephone. Our next question comes from the line of Shubham Bhatra from Ambit AMC. Please go ahead.
Hi, sir. Thanks for taking my question. Congratulations on a strong set of numbers. Couple of questions. Firstly, the Flash margins have been doing really well, and we are growing margins quarter-on-quarter. What would be a sustainable level of margins to assume going forward? Secondly, if you could talk on what is the capacity utilization across...
Sorry to interrupt you, sir, but can you speak a little louder? Just a little louder.
Sure. My first question was, Flash margins have been doing really well. What is the sustainable level of margin to assume going ahead? Secondly, what is the capacity utilization across business segments for us currently?
So the margins, are again going to be in the same level that we have shown in the last, 2 or 3 quarters, which is somewhere about, 16 to 17%. And we expect this to be, of course, stay sustainable and consistently going forward. Of course, many of this or a lot of this is also dependent on the export orders, which is also good for this quarter as well for Flash Electronics. Sorry, your second question was?
Capacity.
Yeah, capacity utilization. On the second capacity utilization on their gear business, their capacity utilization is quite high. But they have how do I say, the facility where they can add on new machines and create capacity. So that's not a concern in terms of space. When it comes to the other EV motor and the other the ICE products related, so they have capacity to the tune of, let's say, about 20%. And plus for the electric vehicle motors and the motor controllers and integrated drive unit, the plant that they had inaugurated about a year ago is already full. And we have now started investing in the new plant, which will be ready in about 3 to 4 months' time.
Sir, I also wanted capacity utilization on our Minda business, the die casting and the... Yeah.
I see. So, yeah, Minda Corporation overall capacity at the group level is, you can say, somewhere about 84 to 85%.
Okay, got it, sir. Thank you.
Thank you.
Thank you. Our next question comes from the line of Devesh Kayal from Monarch AIF. Please go ahead.
Yeah, so can you share R&D spends in other expenses? What was the amount of R&D spends in other expenses?
Sorry, can you repeat the question, please?
Can you share R&D amount?
So R&D expenses, we are investing somewhere about 4% of our top line, which is including OPEX and CAPEX.
And it is not included in others expenses because, obviously the whole expenditure can be bifurcated into one is OPEX, the other is personal expenses, people-related expenses. So people-related expenses will feature in employee costs, and other expenses will accordingly get clubbed across each of those separately. But by and large, will be tracked, as Akash rightly mentioned, we spend about 2% of our revenue in R&D.
Understood. And for the 9 months also, it would be around 4%.
Sorry?
For the 9 months also, it would be around 4%.
Yeah.
9 months of FY26.
Yes, close to 4%.
And sir, if I see the others segment, so if I exclude the aftermarket revenue from that other segment, so the remaining basically the EV products and all, so that seems like a very low number for this year, for this quarter. So is that understanding right?
Yeah, again, this includes firstly our multiple products, which is the the small starter motor division, the EV product lines, then the interior plastic division. There are other products which are under startup phase. So yes, there are products which are getting into SOP. There are products which have recently got into SOP. So the ramp up does happen, but overall the quarter product mix is depending on the larger verticals.
And that segment includes aftermarket revenues also in the others.
Sorry, we can't hear you clearly. Yes.
I am saying the others segment includes the aftermarket revenues also, right?
Yes.
Okay. That's it from my side.
Thank you.
Thank you.
Participants who wish to ask a question may press star and one on the touchtone telephone. Our next question comes from the line of Vijay from Nuvama. Please go ahead.
Hi, sir. Thank you for taking my question. Couple of questions I had. First is on flash electronics. So there is a very good margin expansion on the flash electronics over last 6 to 9 months. Just wanted to understand what is driving this margin expansion. How much is coming from the synergies and what else are the main factors for that?
Yeah. So as you know, flash electronics houses multiple products, which is EV as well as on the ICE related powertrain product line. And the third vertical is on the gears business. So there are three primary product lines. So of course, margin expansion is coming from the EV product portfolio as well as of the gear businesses, which are exports. These are the reasons, again, a favorable product mix on how the expansion of the margin is happening. But yes, growth is coming across all three product lines and across domestic as well as exports.
And do we expect to maintain this 18% EBITDA margin going forward for flash electronics?
So I just shared before, it's sustainable numbers could be again about 16 to 17% here and there. But of course, our interest is how we can expand them further, which is our efforts that we're putting in place.
Secondly, sir, just on the same, the rare earth magnet issue, that is behind us, right? For us, we're still seeing some impact from there.
No, that is behind us. The overall industry, I think, has figured out multiple ways. So have we. And plus, now with the new budget and the overall magnet corridor that is being created, a lot of efforts have been done and a lot of opportunities open up for the industry as a whole. And secondly, technically and technology-wise also, we have created motors which are magnetless and rare earth free, and with ferrite magnet also, which are not coming from China or from other countries as well. So yeah, technology-wise also we have developed products for across segments which can cater, these products also.
So looking forward into the fourth quarter and FY27, are you seeing any raw material headwinds, and how do you plan to tackle it, especially on the copper, the aluminum, and other metals side?
I was reading some of the financial statement of some of the large resource companies in India. Many have hedged their position and many have not hedged. And you would have already seen some companies had hedged silver at some $39 in Q2. If those companies are not able to predict how the commodity cycle will behave, it's very, very difficult. But thankfully, whether it is Flash, whether it is Minda Corporation, all our group companies are following a very strategic approach, which is passing on the cost. We don't enjoy the upside, neither we lose our sleep because of the price going down. So therefore, we are properly hedged and we are not in the business of making money out of commodity uptrend or downtrend. We are here to really excellent manufacturing capability and deliver quality services to our clients.
There is no time lag between the raw material price increase and pass on to the customer, or is it there is a delay?
I think I just answered the question to the previous question. We typically, do this index cost pass on quarter, so we do through up every quarter.
Okay. Thank you, sir, and all the best for the upcoming quarters.
Thank you.
Thank you.
Thank you. Our next question comes from the line of Dhananjay Mishra from Sunidhi Securities. Please go ahead.
Yeah, thanks for the opportunity and congratulations on the strong numbers. Sir, we have mentioned about kit value in two-wheeler segment, including flash electronics. So likewise, what could be the expected kit value for the four-wheeler and CV segment once all our products go on stage?
Oh, that's a good question, but it depends. If I look at a complete kit value with flash electronics and what we can offer only from the engine side, it is only from the primarily on the power electronics front, and now we are working, for the four-wheeler motor that we have developed. So you can typically put somewhere about 50,000 to 60,000. However, if I club products and make it a system solution into 6-in-1 or 7-in-1, that could even go up to 90,000 or 1 lakh rupees. So it really depends, as a complete kit value, but customers may select to take all as a combination. They may select to take one component out of this. They may select integration. So a lot of possibilities are there when it comes to this product offering in the four-wheeler space.
Okay. And you mentioned for the new order, which is into smart key segment, that will start in Q2 FY28, right? Will start.
Which segment, sorry?
The new lifetime order we have received of 1,000 crores. So, which will start in Q2.
That part of it will start Q2 of next fiscal year, and part will start in Q2 of 28 or 27.
Okay. Now here it is mentioned the facility will be completed by Q4 of FY27, right?
Which are you talking about, the sunroof or the
Switches. Sunroof you mentioned Q1 of FY27.
Switches is already under commissioning. The plant is already expected to be ready by quarter 4 FY27, which is about 1 year from here. And the SOP is expected to start in quarter 1 or quarter 2 in FY28. And then the ramp up further will happen in, let's say, about a year from there.
And once we start getting other orders from other OEMs in this sunroof segment, what could be the potential annual contribution from this segment, let's say in FY28, 29?
That's a very broad question, but as you know, the sunroof market in India is expanding and growing very fast. Now, of course, there are a couple of companies as well who are working at this segment, but sunroof is expected to penetrate faster. There are also various technologies that are coming in. So our target is how we can go to at least 10 to 15% of market share by FY20, 30 or 31. That is our intention at first.
Okay, thank you. That is all from my side.
Thank you. Thank you very much.
Thank you. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. Our next question comes from the line of Munindra Upadhyay from Elara Securities India Private Limited. Please go ahead.
Thank you for taking my question. Actually, I have a couple of questions on a bit long-term trend first. So on the ADAS and sensors business, what kind of demand outlook or localization potential do you see for the, say, next 3 to 4 years down the line? And what are our plans to capitalize on that product?
Yeah. So I think firstly, safety is, I think, very important globally and more importantly in India. It is also personally very close to my heart on how we can contribute as an organization to this. Coming about to the ADAS systems, there in the new four-wheelers that are coming in, there are very much equipped until L1, level of ADAS systems coming from the Indian or even global OEMs. Number two is these systems are currently provided by the large global tier ones, as it is a system solution offering. Our focus here across the ADAS as a product is to enter from the component side and not the system when it comes to the passenger vehicle or others. So that's number one focus. Number two, when it comes to the other segments such as two-wheelers and all, we have already developed products which are already getting tested at customer end, which is a complete system solution offering for front collision, rare blind spot. So these are some of the systems that we have already developed for this market. And then looking at the connect components from the ADAS, this is where we would like to work, and we're looking for a couple of opportunities in that respect. So ADAS is something that we are going to be taking going forward from the component side primarily.
Okay, that was helpful, sir. And my second question was on the export front. So how we see the demand panning out? Is the situation improving there, or any comment on the recent FTAs? Do we expect to pick up in demand due to this? Any commentary or outlook would be good on this, sir.
Yeah, so Mr. Bhadir, the first time in I think 6 to 8 quarters, particularly for Minda Corporation, the export orders have come to normalcy. And thanks to the clarity that is brought by various EU agreements as well as the tariff clarity, etc. However, in the quarter 4 and the next year, we expect our new SOPs to come into new orders coming to start up production, as well as the existing business ramp up to happen. So it is expected to grow. I cannot really comment how much and how fast, but it is just the first quarter and too early to comment. So we'll have to see quarter-on-quarter basis, at least for the next 2 quarters.
And in addition to what Akash just said, our long-term vision remains quite strong for exports. We expect to take our export business from current about 500 odd crore to 1500 crore by 2030. That vision remains static.
Okay, thank you, sir. That's really helpful. That was all from my end.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
So thank you very much, and I would like to really thank Elara for organizing this call and thank everyone for joining the call. We remain highly confident in our growth trajectory, both in the near term and long term, driven by strategic investments and unwavering commitments to advancing our products and technologies. We are committed to creating value for all our stakeholders and shareholders. We are investing deeply in our capabilities in terms of people, capacities, capabilities, technologies, and competencies across fields. I hope we have been able to respond to most of the queries. For further information, we request you to please do get in touch with our IR team. Thank you and have a great day.
Thank you. On behalf of Elara Securities India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.